Hi friends, welcome to our channel Stock Informer. Let's dive into today's stock discussion.
What if I told you one of India's biggest profit machines is trading at a PE multiple that's less than half of its competition? We're talking about ITC. For years, it's been the classic value trap, a great company with a stuck stock price. But the game has changed. With the historic Hotels Demerger and strong financials, is the era of the ITC Conglomerate discount finally over? Today, we're cutting through the noise. We're breaking down ITC's last 4 quarters, the major announcements, and giving you the 2025 valuation you need to know. Let's dive in. To understand ITC, you have to look at the numbers from the last 4 quarters, all the way up to Q2 of FY26. The headline, revenue is mixed, hovering around 18,000 to 20,000 crores, but net profit is consistently strong, ranging between 4,800 crore rupees and 5,400 crore rupees. Why the stability? It all comes down to the core segments, cigarettes, the profit engine. This segment is the undisputed cash flow king. Stable tax regimes have allowed for consistent volume and margin expansion. This is the capital that funds everything else. FMCG, the future. This is the growth engine. While smaller, it's showing double-digit revenue growth. This is where ITC is battling the giants like HUL and Nestle, and the management's focus is on improving margins here. Hotels, the catalyst. Post-pandemic, the hotel business is roaring back with high occupancy and rising room rates, generating strong improving margins, which makes the next announcement so crucial. This is the single most important factor driving the narrative around ITC today. The hotels business demerger. ITC is spinning off its entire hotels business, ITC Hotels Limited, and listing it separately. The structure, TC will hold about 40% of the new entity, and you, the current shareholder, will receive the remaining 60% pro rata. The impact. Why does this matter? For years, the market has slapped a conglomerate discount on ITC. It was penalized because a high-growth, capital-intensive hotel business was bundled with a high-margin, stable cigarette business. The upside. By separating them, the market can now value ITC's pure-play FMCG and cigarette business separately, and the hotels business can be valued against its own peers. This move is designed to unlock massive trapped value. Let's talk valuation. This is where it gets interesting. At a current price around 404 rupees, look at these metrics. Trailing PE ratio, a stunningly low 14.5 times. Compare that to pure play FMCG giants trading between 40 to 60 times earnings. This is the discount. Dividend yield, a very generous 3.55%. For income investors, this is a major draw. Balance sheet, it's a rock. Virtually zero debt and an outstanding return on equity, ROE, of over 28%. Host, this P/E is simply too low for a company with this cash flow and profitability. The stock is fundamentally undervalued. No investment is without risk. For ITC, it's always about regulation. The primary risk, taxation. Any sudden, harsh increase in taxes or stricter regulation on cigarettes is the biggest threat. The upside. The entire investment thesis rests on 2 catalysts. The successful and final execution of the Hotels Demerger. The ability of the FMCG other segment to sustain double-digit growth and finally cross that margin threshold. Today's price movement, which we noted was relatively flat, simply reflects the market waiting for the next big announcement on the demerger timeline. Until then, it's low volatility consolidation. So where do we stand? ITC is a core portfolio stock. It gives you stable income through high dividends and now has a clear path for capital appreciation through the demerger. Our assessment, ETC is a strong buy accumulate candidate. The wait is for the PE multiple to catch up with its peers once the demerger discount is removed. What are your thoughts on ITC? Are you holding, buying or selling? Let me know in the comments below. Don't forget to like and subscribe for more deep dive analyses. See you in the next one.
That's all for today's market update. If you gained valuable insights, please consider liking this video. For continuous access to our expert analysis on Indian share market results and announcements, be sure to subscribe to the channel. Your support by sharing this video with your network is also highly valued. Thank you for tuning in.